Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today.
Hey everybody, looking at SPY on the daily and weekly, then we'll look at the shorter term and another comparison to the correlation on oil. Some of you may be getting sick of it, but man oh man, if you are trading anything to do with the market or oil, you need to be watching both at the same time. And if you can't fit it all on your screen, get another monitor for $100. The monitor I bought 3 years ago for $100 is like Stone Age compared to the giant, beautiful $100 monitor of today. So looking at SPY on the daily, the bulls showed up in a big way. They bought the dip. We had a very big pullback first thing, which we will look at. We bounced off the 10-day moving average support. The bulls defended the middle Bollinger Band, turned that 50-day moving average into support, and closed up near the high. And this was a perfect day for the bulls. So this actually, we closed even higher. This is factoring in some after hours with a little bit of pullback. But either way, we're looking up at 217.53 as the next key resistance level. If we break 217.53, I am going to be that much more confident that we are headed to new all-time highs in the near future. So all moving averages are back as support. We look at the weekly time frame. We're gaining the 10-week moving average of 215.95. That is the level for the bulls to close above over the next 2 days to have all daily moving averages and all weekly moving averages back as support. So let's look at this 5-minute chart and oil compared to it. Here's the start of the day. Here is 9:30. So we trade sideways and then we pull back. Trade sideways, big oil dump correlating with that pullback. What time did we find the bottom? 11:10 a.m., 11:15 a.m. What time is it here? 11:10 a.m. So now is when the candlesticks begin to pretty much mimic each other. Let's zoom in here. And then we'll get the breakout as well. Pull that chart back up. So we've got the low of the day correlating with the low of the day on oil. Look at this, 3 green candlesticks, 1 red, 1 green, 4 green candlesticks, 1 red, green showing back up, 20 minutes, 25 minutes of green, 25 minutes of green, 1 red candlestick, 2 green candlesticks, 1 red candlestick, 2 green, 1 red, and then the correlation started to shift a little bit. So I noticed this shift in the correlation when oil continued to head to the upside and SPY kind of paused out a little bit. And at that point, SPY had a triple top, 215.41, 215.40, and then 215.40 again. So that was the triple top. This candlestick right here broke the triple top, turned all 5-minute moving averages into support, and was the bullish signal. We then consolidated for 40 minutes, back tested 2 candlesticks in a row, held the 200 period moving average support, and then the bullish oil news came, and oil ripped, and the market ripped with it, and it was off to the races for the bulls for the rest of the day. At the end of the day, we consolidated. Look where we bounced off of 20 period moving average support and a very bullish end of the day, ripping to higher highs. So the correlation between oil was extremely strong today. Some days it differs. I am always gauging the strength of the correlation. Some days you can note that it favors the bulls of the market. Some days you can note it favors the bears of the market. And that's little clues that are worth knowing. So we had a bullish break on SPY, giving the signal for bullish entry, and then we had very bullish follow through. So keep an eye on oil, keep an eye on SPY. SPY bulls are in full control. Keeping an eye on the hourly chart. We're getting a little overdone. RSI, it's cooling off now. It was up in the upper 60s, but we have all moving averages as support. Look at this hourly trend where we had the bullish higher low pattern maintaining. It was a very strong rip after the Fed. We pulled back significantly, but we maintained the higher lows, holding the higher low compared to the Fed day. Higher low today, right off the 200 period 5-minute or 200 period hourly support, and now heading to higher highs. And if we break that 217.53 level, very convincing momentum for the bulls. So I appreciate you watching. Again, oil and SPY, cannot say it enough. I pick up clues throughout the day on which direction to be looking in based on that correlation. Thanks for watching. See you tomorrow.